Maverick traders, welcome out to your market roundup for December 30th. Corey here with you. We're going to take a look at meaningful news. We're going to look at sector rotations. We're going to look at what's an opportunity, bullish, neutral, or bearish as we move into the new year. Expect some volatility.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So last Monday, I did the market roundup and I talked about this important week. It's called the Santa Claus week. Basically, it's post Christmas. So once you pass Christmas, it's that week through to the new year. People watch that closely. It's historically an important time period to just give you a sense of how markets are going to behave in the coming year and for the foreseeable future. And the old saying is, if Santa Claus fails to call, bears now come to Broad and Wall. And we're certainly seeing that. Dow, S&P, NASDAQ all down around 1%. Oil up 1.3%. Gold down 0.32. Advanced decline line, we had 68% of stocks falling. And the 50-period moving average suggests we're in a full-blown bear market, right? 73% of stocks are trending lower. So as we look at the S&P, we knew, where there's smoke, there's fire. This was the bad day. This was a reversal. It broke some major levels. Now, did we have a bounce-back rally? Yeah, but for me anyway, I certainly wouldn't trust that until we clear resistance and maintain up here. I just couldn't feel like that would be a good buying opportunity. In fact, I think that's exactly what it was. It's just kind of a selling opportunity. We've already seen the market breadth, the majority of stocks were starting to weaken and so forth. So what was going to happen is either all those stocks in a downtrend, we're going to have to reverse back into uptrends, or just those major components, the Apples and Googles and Amazons of the world, were going to have to blast us higher on their own. And I didn't think either of those were very likely. So we kind of continue to weaken a bit. First, you'd call this just more of a sideways. I mean, the moving averages are sideways. We're not in a full-blown bear market or anything like that. It's just not a great buying setup. It's not so much a huge selling either necessarily. But having said that, I would still, as I've talked about, still expect a further decline and a further test. If you are looking at advanced decline line on the New York Stock Exchange and so on, it's already taken out this low back here. It's probably kind of giving you a leading indicator that, hey, we'll head down towards those lows in the new year. If you look at the NASDAQ, it's also weakening, not quite as much because, again, more weighted towards the biggest names and the ones that have held up relatively well, but may not be far behind in terms of a breakdown. Now, as we look at the Russell 2000, this gives a sense of where the majority of stocks already are. And again, this one's in a full-blown bear market. So you sort of have the S&P, and it's made up of a lot of little components and then a few big ones, right? And the big ones, well, maybe make it that size, they're doing great. But the majority of stocks, which are all of these over here, this whole area, right, they're doing very poorly. Now, I realize the Russell 2000 is small caps, but the same principle applies within the S&P 500. If you were to break down that index, the majority of stocks are trending lower, as we already saw, 70 some odd percent. So most things, and that's what this Russell really shows, are in downward trends. If we look at today's action, obviously a lot of red, a lot of selling pressure, and specifically right over here focused in the semiconductor space. So a lot of selling before we hit the new year. Now, what tends to happen is a rotation of sorts. What they call the January effect. What has been strong becomes weak. What has been weak becomes strong. And the reason this plays out after a big market year like we've had this year is really tax reasons more than anything else. A lot of people are delaying their sells on shares that they want to lighten up on. If you own a ton of Nvidia, you might want to lighten up on some of those shares, but you want to delay that until January hits to delay having to pay taxes on that. So expect some of that. Expect that in the month of January, that don't be surprised if a few of the worst sectors for 2024 are acting the best early in 2025. And don't be surprised if some of the best sectors and areas of the market actually become the worst early in 2025. It doesn't mean it has to last the entire year, but don't be surprised by that type of rotation. Let's highlight a couple of bulls, couple of bears here. Teva on the bullish side, just a classic breakout. I wouldn't be in a hurry to buy, but if you get some little pullbacks and such, that might be on your list. Certainly some news related. I mean, this is just technically a big breakout out of a big basing pattern. And generally speaking, you're going to go higher still. You're going to zig and zag for a little while to the upside. So maybe a couple more days of pullback, and then it's worth a look. If we look on the bearish side, just purely technical, you've got a low base forming down here. You've got a downward trend. Keeping it simple, just looking at the charts today, these would be a couple of candidates. Now, here's what I don't like about them quite as much. As I said, what I really think would be best would be find some of the worst performing stocks of 2024 and then see if there's any of them that have moved into an uptrend and that have some setups to buy. And then look at what are the best performers of 2024 and see if any of them have just started to move into a downtrend. And if they have, maybe there's a bearish setup there. Look for a little bit of a reversal from how we normally do it. Normally, we just want to continue with whatever is strongest and weakest. We may need to think outside the box here a little bit early in January. New year after a strong performance for the S&P most often leads to some profit taking and the January effect. Nothing really on the economic and earnings front that needs to be pointed out. In fact, non-farm payrolls, which is usually the first Friday of the month, that's even pushed off until next week because of the holidays and light volume week and so forth. So the fireworks tend to start on January 1st, the first trading day. It's not always January 1st, but the first trading day of the new year, which this year happens to be on Wednesday, January 1st. So expect volatility around that. Expect some excitement around the turning of the calendar. Hope you enjoyed today's market roundup. Have a great week, everyone. We'll see you next time.